Today we're going to start to dig into the alphabet soup that is accounting. Welcome to Accounting How To. I'm your host, Carolyn Grimm, and that's my sidekick, Terrence. We're here to put the fun in accounting fundamentals. Although I'm not sure how much fun FASB is, but we'll see what we can do. So FASB is the Financial Accounting Standards Board. It exists to discuss financial accounting standards and nothing else. It doesn't talk about managerial accounting standards. It doesn't talk about the weather. It only cares about financial accounting standards. So FASB is an independent private sector, not a government agency, and it is not for profit. This is very important because what we want is an independent council of people looking at these accounting issues as they come up. So the FASB board is made up of 7 board members, and they all work full-time at FASB with a support staff. And the Securities and Exchange Commission, which is in charge of generally accepted accounting principles, GAAP, delegates financial accounting standards to FASB. So it says, we want you to handle this for us. So FASB is the designated standard setter for any organizations that have to follow generally accepted accounting principles, GAAP, meaning they're publicly traded companies. Now, previously, the organization that was designated by the SEC to oversee these accounting standards was called the Accounting Principles Board. And the biggest difference there is that members were part-time, and most of them worked at accounting firms. So first of all, they didn't have the time to devote to things. So it took a long time for any kinds of changes or addressing of anything that needed to be addressed. And because their day job was working at an accounting firm, there could have been a conflict of interest. So to get rid of that, this new Financial Accounting Standards Board was set up to oversee all of the financial accounting standards. So how does FASB set standards? Well, first of all, they identify a topic, some accounting treatment of maybe it's something pension related. How do we deal with this kind of transaction? So then before it goes any further, what they're going to do is they're going to do some research to see if there's something similar already existing, or if people have already done some work on this, or how have accounting firms been treating this issue. And then they're going to decide, is this worth putting on our agenda or not? Is this worth more discussion? And if it is, then they're going to hold a public meeting. And people are going to come to the meeting and say, we think this, we think that. Have you considered this? Have you considered that? And then they're going to put together all of these notes, their rough draft, and then they're going to issue that document for public comment. Then they'll hold public hearings or roundtables if it's a big project. They're going to get all the stakeholders involved in talking about this issue. And then based on what comes out of those public hearings or roundtables, then they're going to redeliberate all of the comments, the research, and they're going to pull this together into a final statement. Now, they can either say, we're not going to rule on this, or they're going to approve it, and now it's going to become an accounting standards update, an ASU, and it will now be part of GAAP, our generally accepted accounting principles. From there, their work is not yet done, because then it has to be disseminated out into the accounting world, where they have to educate accountants on what they've just done. This is what the new ruling is, this is what the new standards update is, and this is how you need to, and from there it will be implemented by all of the various accountants who are involved with anything involving GAAP. And there you have it, part of the ABCs of accounting, FASB. Until next time, stay balanced, my friends.